Hello and welcome to episode 23. This week we're going to reveal who won the battle between 3i Group and Greggs. We're going to check in on our portfolios and we're going to battle two more stocks against each other. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. Once again, it wasn't even close. With a complete whitewash of 3 votes to none, the winner was 3i Group.
3, 2, 1, go.
Last week was the absolute bloodbath following the fall in US tech stocks due to the release of the Chinese DeepSeek, the equivalent of a ChatGPT. This week, though, much better. The income generator, having fallen from 0.7% last week, is up 1.2%. The benchmark down 0.3% last week, but up 0.7% this week. And the Battle Royale down 0.5% last week and now up 1.2%. Interestingly, keeping up pace with the income generator, but both beating the benchmark. Here are the biggest movers in the portfolio. Reddit jumping a massive 9.4%. Spotify close behind with 7.5%. And bringing up the rear, Microsoft down 6.5%. I'm hoping that's due to the fall in US tech stocks and nothing more than that. AMD not looking great. The Battle Royale overall. The last 7 days it was neck and neck with the UK market, 2.1% for the Battle Royale, 2% for the GB market. I'll take that. Sorting our 21 holdings by total value, Tesla still miles ahead with a total return of 86%, although down 0.5% on the week. On the beach, a very handy 71. Then we've got nickels and lots of green. Then further down, holding up the rear, we've got B&M, still our worst performer at minus 21%, although up 2.6%, so hopefully signs of a recovery. Black Rifle Coffee losing 5% on the week and down 14%, so it is not doing too well. But all in all, still quite happy with this portfolio. We currently have 21 holdings, and I'm very pleased to say that 12 of those are in the green and only 9 in the red. So an amazing turnaround from last week. We're now more in the green than we are in the red, which proves we're excellent investors, and surely nothing can ever go wrong from here, right? Right? But let's forget about growth stocks for a second and turn to the relative certainty of dividends and the income generator. We're now up to £15.72 per annum, which is up from £14.99 last week. We've got a guaranteed locked-in £2.43. Yep, that's right. Getting paid in December. That would have been £3.09 now. And in March, that is up to £2.08, which means we're going to pay out in March, a lucky subscriber, £5.23. Let's see how much it gets to by the time we actually pay it out in March. So how's everything looking overall? Well, we've now added £525 to each of our portfolios, which is just mad to me. The time goes so quickly and it all does really add up. All in the green, which is lovely to see as well. The income generator, the smallest gains of the three with 3.19%, but that does bring us in almost £16, which is great. And the previous leader as of last week with 8.92% and an increase of £43 was the Battle Royale. However, this week, following a good week and not a bloodbath, all of them are up. The income generator now 4.28% up, the benchmark 6.35%, and the Battle Royale beating everything 10%. And that is bringing us another 50 quid into the portfolio, or it's worth at least an extra 50 quid, which is brilliant. We're beating the market, we're investing in the right things, and it feels good. Long may it last.
3, 2, 1, fight.
This week we asked AI which were the 2 best growth companies to invest in. We used Microsoft's Copilot, and for its first suggestions, very surprisingly, it suggested Apple, and even more surprisingly, given that Microsoft owns ChatGPT and their history with Elon Musk, its second choice was Tesla. Now, since we already own Tesla in our portfolios, I asked it to try again, and this time, somewhat unsurprisingly, it suggested Microsoft. Again, Microsoft's in our portfolio, so third time's the charm, and it suggested Netflix. So let's take a look. Everybody knows Apple and everybody knows Netflix and everybody knows that they are fantastic companies. However, when you look at their two snowflakes, you'd be forgiven for thinking that simply Wall Street thinks Netflix is the much better company with all that lovely yellow as opposed to Apple's somewhat strange red. However, looking into it slightly more deeply, Apple has great future growth projections, still according to simply Wall Street. That's got a nice steady little increase, but if you have a look further down, the analysts' forecast for 26, 27 and beyond just goes up and up and up. And even more so, the return on future equity, they reckon the company will be up 150% as opposed to the industry, which is only 10.2%. The other little consideration is that they think that Netflix is overvalued by 12.5%, whereas Apple, they reckon, is undervalued. It's not what you would think, is it? Netflix, on the other hand, if we take a look at their future growth, it's also got a nice upward trajectory. It is also a steep upward trajectory and again beating the industry, this time by 37.4%. The other differentiator is the dividend yield, which of course Netflix doesn't pay, and Apple just starting to eke out the dividend, 0.4%. But is that going to increase, and what is the growth going to look like on that? And if we hold this company for 20 years, what could that potentially be? It could switch over to a nice dividend payer just in time for us to start retiring. However, all the pros for Apple does not negate the fact that Netflix is very exciting. It's up and coming. They've got great subscriber numbers, and the future for the company looks fantastic. So it's quite a difficult one today.
Let's take a look at and compare their high-level metrics.
Here they are compared side by side, and there's not much to choose between them. If you look at the two graphs, they both show slow and steady, well, maybe fast and steady upwards trajectories. Apple, the much bigger company, but there aren't many bigger, 3.55 trillion. Netflix ain't no slouch, it's $417 billion. It's got a higher PE ratio of 47.96, however, its earnings per share of $20 beats Apple's of $6. And a PE of 37. The dividend yield was mentioned before, and otherwise the revenue, I mean, just staggering numbers for both, 391 billion versus 39. So slightly different companies, both in great positions, both have fantastic futures. It really, I think, is down to personal preference and what you think has a better chance of growth over the future. So let's decide.
So there you have it. Who do you think we should invest in? I'd love to hear your thoughts in the comments. But from my perspective, I suggest we invest in... Thank you so much for watching, everybody. I hope you have a great week in the markets and in life.
Goodbye.